Oh hi, good morning. This is Jovi Overo again at Beta 2 in London. It's the 11th of August 2011 and the time we have is now 9:38. Good morning. Yesterday, risk markets came under pressure again as European issues, in particular European banks and potential funding pressures were in the forefront of the market's focus. European equities, and again in particular peripheral linked stocks, underperformed heavily yesterday. The euro currency was also hurt in massive risk of trade, and this was in spite of the relatively good start to the day that it had. In Australia, we had jobs data, which is quite disappointing. The latest labour market data showed an unexpected increase in the unemployment rate from 4.9% to 5.1% in July. Now this is the highest rate since November last year. It's staggering. Talk is again of shifting back to possible rate cuts this year. I think it's unlikely, but I feel that that is now back on the table. If we turn to again the huge overperformer, the Swissy, the Swiss National Bank, in our opinion, is fighting a losing battle at the moment. In a newspaper interview, the Deputy President Jordan, he also says that the SNB's measure to curb the franc strength do not have to include intervention. The Swiss National Bank yesterday announced a further expansion of its liquidity operations, and the Swiss National Bank has also pledged to conduct franc swaps operations. To date, however, I think the Swissy has realised, or the SNB has realised, that flooding the market with liquidity has failed to curb the relentless rise of the Swiss franc. So again, quite clearly, the SNB is fighting a losing battle. If we turn to UK, yesterday we had the latest the latest BOE report on inflation. Now the Bank of England, they stopped short of acknowledging the realities of the current economic situation. In contrast, if you look at the Fed Reserve on Tuesday, they acknowledged that growth, and I quote, growth had been considerably lower than expected. I think you find that the Bank of England made no such statement. Instead, they came out and said that output over the past year appears to have grown at a rate below its historical average. Again, I feel that is a massive, staggering understatement, quite clear. What's quite clear, however, is the common thread that's been noticeable between the three central banks, by the Fed, the Bank of England, and the Swiss National Bank, and that is that policy options are becoming more limited and less effective. This, quite frankly, is worrisome. Now, the firepower that was in place 3 years ago to combat the current slowdown in economic growth, global activity, and the financial markets is no longer available today. So what now? It's very hard to predict. What we're looking at is huge market volatility, massive swings. You've got global, you've got geopolitical uncertainty. So right now, it's very important that you speak to professionals as to how best to preserve your wealth in this current climate. For more information, log on to our website www.beta2.co.uk. Thank you.